I want to continue our brief overview of the taxation of charitable gifts. Last week we took a look at the various ways in which companies can make gifts to charities, and this week we turn our attention to individuals. Last week we saw how companies could benefit by making cash donations, transferring property or seconding staff, and this week we will look at the similar provisions for individuals. Donations by individuals are net of basic rate tax, but if you are a higher rate taxpayer, then you need to make sure that you claim the additional tax relief on your donation. Companies get tax relief in the accounting period in which the charitable donation is made. Individuals get tax relief in the tax year. The question then arises, under what circumstances can a charity reclaim the tax that you have deducted at source, as this is clearly the principal aim of giving to charity under gift aid. However, where normal entry charges are requested as a minimum voluntary donation, it is unlikely that they will qualify for gift aid. The HMRC website contains some useful guidance in all these areas. Here are a few examples to illustrate this point. Did you know that sponsored challenges only qualify for gift aid where the person doing the challenge bears all of their own expenses, or where charity membership fees do not include access to facilities or services, where church collections are only for that church and not for a third-party charity? This doesn't prevent anybody from raising funds for a charitable cause, but what we're speaking about here is whether the charity can then reclaim income tax on the donation that it has received through gift aid. The Gift Aid Small Donation Scheme was introduced so that charities with a large number of small donations would find it easier to reclaim the tax relief on the donation. But there are some limits on how much can be reclaimed, and each donation must be less than £20, and the maximum tax reclaimed in each year, £1,250. As with companies, there is a limit on the benefits that the donor can receive in return for making a donation. For example, where a charity has requested a voluntary donation of £10 to cover a ticket price of £5, bus of £2 and £1 refreshments, the benefit received by the donor is 80% of the donation, and therefore it will not qualify for gift aid. Under the payroll giving scheme, the charitable donation is deducted from your wages or salary before the tax is calculated, but it is only available where your employer or pension provider has already set up a scheme. Now, when it comes to giving land or shares, an outright gift will not give rise to any capital gains tax. However, where the asset is transferred at more than your original cost, then tax may be due. However, on that same gift, you may be able to claim income tax relief, but you need to notify HMRC either on your self-assessment tax return, or if you don't submit self-assessment tax returns, then just contact them directly. You can also make donations in your will. These will principally affect the IHT liability on your estate. Small donations will reduce the value of your estate. Donations in excess of 10% of your entire estate will actually reduce the rate of IHT. Something which we find that most people are quite bad at is actually retaining records of the donations they have made. So you should have details of all your gift aid donations. You should keep details of all land and property transferred, all legal documents, and especially correspondence with charities. The quantity of rules and regulations associated with charitable donations seems disproportionate to the value of most donations that are made. I would therefore recommend consulting HMRC's website or speak to ourselves. I'm Alan Long from the Long Partnership, slaying your dragons and making life less taxing.